One bank. A single bank now controls more silver than your government, more silver than the entire COMEX exchange, more silver than most nations could ever imagine holding. And while they were building this position, while they were accumulating for 15 straight years, you were told silver was a bad investment. You were told gold was better. You were told to just keep your money in the bank. They were buying. You were sleeping. And now they have completely flipped their position. They are no longer betting against silver. They are betting everything on silver moving higher. 750 million ounces exposed. A bank-exposed move. The question is, did you miss it entirely, or is there still time? Let us find out. Welcome to the Hidden Economy. Hit subscribe right now, because what I am about to reveal is not discussed on any mainstream financial channel. And if this video helps you see what is really going on, drop a comment saying wake up so I know you are paying attention. Let us get into it. I need to show you something that will change how you view this entire situation. Pull out your phone, open Google, and search JPMorgan Silver Fine 2020. Go ahead, I will wait. You see that? $920 million. The largest fine ever paid by a bank for precious metals manipulation. They were caught manipulating silver prices. They paid nearly $1 billion. And you know what happened next? Nothing. They kept their silver, they kept buying more. And now they own more silver than any private entity in human history. Let that sink in for a moment. A bank gets caught manipulating a market, pays a fine, then corners that same market, and nobody talks about it until now. Let me take you back to where this all began. Because once you understand the origin, everything else clicks into place. 2008, the financial crisis. You remember it, right? Banks collapsing, people losing homes, the entire system on the verge of failure. There was a bank called Bear Stearns, one of the biggest names on Wall Street, and it was going under. But Bear Stearns had a dirty secret. They were sitting on one of the largest short positions in silver ever recorded, one of the biggest bets against silver in history. Now here's how the game works. When a bank fails, someone has to take over its positions. Someone has to absorb that risk. And guess who stepped in? JPMorgan. They bought Bear Stearns for almost nothing. And along with the bank, they inherited that massive short position in silver. Now imagine you are JPMorgan. You have just been handed an enormous bet against silver. What do? Most banks would try to unwind it, reduce the damage, move on. JPMorgan chose a different path, something that would take 15 years to fully carry out. They kept the short position. They used it to push silver prices lower. And while prices stayed depressed, while everyone else ignored silver, they quietly accumulated physical metal. Let me say that again, because this part matters. They pushed prices down using paper contracts. And with the other hand, they bought physical silver for 15 years. Every time silver tried to rally, mysterious selling showed up. Every time momentum started to build, massive paper contracts flooded the market. And every time prices dropped, JPMorgan was there buying the real metal. This is not a conspiracy theory. This is documented. They paid $920 million because they were caught. But the fine was for manipulation, not for owning silver. So they paid the fine and kept accumulating. Now let me show you the numbers, because this is where it becomes insane. In 2012, JPMorgan held less than 5 million ounces. Almost nothing. By 2015, 50 million ounces. In 2019, 150 million ounces. By 2024, 500 million ounces. And in January 2026, 750 million ounces. In just the last 6 weeks alone, they added 21 million ounces. That is more than most countries hold in their entire reserves, accumulated in 6 weeks. But here is what really shocked me while researching this. 750 million ounces. What does that actually mean? Every silver mine on Earth combined produces about 830 million ounces per year. That is total global production. JPMorgan alone holds nearly 1 full year of global supply. Think about that. If every mine shut down tomorrow, JPMorgan could supply the entire world for almost a year using only its stockpile. The COMEX exchange, the place that supposedly sets silver prices, has about 32 million ounces available for delivery. JPMorgan holds 23 times more silver than the entire exchange. The London market, the LBMA, supposedly the largest silver market on the planet, holds around 790 million ounces in total. JPMorgan alone holds almost as much as the entire London market combined. A single bank. Not a country, not a government. NT. A single bank. Now here is where this becomes personal for you. Imagine you have been saving money, maybe in a bank account, maybe in stocks. You believed you were being responsible, but while you were saving dollars, JPMorgan was converting those same dollars into silver. Year after year, for 15 years, your dollars stayed dollars. Their dollars became 750 million ounces of real metal. And now let me show you what just changed everything. Between June and October of 2025, JPMorgan did something they had never done before in their entire history. They closed out their entire short position. 200 million ounces of bets against silver wiped out. Zero shorts. For the first time ever, JPMorgan is now fully long silver. Do you understand what that means? For 15 years, they benefited from silver prices staying low. That allowed them to accumulate cheaply. Now they want prices to rise. The accumulation phase is finished. The profit phase has begun. And here is the math that should keep you awake at night. JPMorgan holds 750 million ounces. For every single dollar silver rises, they make $750 million. Not per year, not per month, per dollar. If silver moves from $100 to $200, JPMorgan makes $75 billion. If it goes to $300, they make $150 billion. If silver reaches its inflation-adjusted high from 1980, roughly $600, JPMorgan would be sitting on $450 billion worth of silver. Do you really think they accumulated 750 million ounces just to watch silver sit at $100? They did to make hundreds of billions. And here is the uncomfortable truth. When JPMorgan makes hundreds of billions, where do you think that money comes from? It comes from everyone who failed to position themselves. It comes from everyone who held paper while they held metal. It comes from everyone who trusted the system while they quietly cornered the market. This is a wealth transfer, and it is happening right now. Okay, now let me show you why this goes far beyond JPMorgan. The entire system is starting to crack. You know how a bank run works, right? Banks take deposits, lend most of the money out, and keep only a small amount in the vault. It works fine as long as everyone does not show up at once. But when panic hits, when everyone demands their money at the same time, the bank cannot pay. The system breaks. The COMEX silver market works the exact same way. There are paper contracts representing silver, far more paper than actual metal. It works as long as most people trade paper and never ask for real silver. Here are the numbers right now. Paper claims on COMEX total 760 million ounces. Actual silver available for delivery is 32 million ounces. That is 24 paper ounces for every 1 real ounce. 24 to 1. Now ask yourself what happens when more people demand the real metal. I do not need to guess. It is already happening. In the first 2 weeks of January, 33 million ounces were pulled out of COMEX vaults. 26% of everything they had disappeared in 7 trading days. On January 7th alone, JPMorgan delivered 8.1 million ounces. They accounted for 99% of all deliveries hat day. Everyone else combined made up 1%. Do you see what is happening? Confidence in paper silver is collapsing. People want the real thing, and the only entity capable of delivering is JPMorgan, because they have the metal. Almost no one else does. But the pressure is also coming from another direction. Remember when I said this is a wealth transfer? I was not talking only about JPMorgan. On January 1st, 2026, China implemented strict new export controls on silver. They now treat silver the same way they treat rare earth elements, as a strategic material with restricted exports. Only 44 companies in all of China are now allowed to export silver, and every shipment requires government approval. Why does this matter? Because China refines 65 to 70% of all silver produced globally. They are the choke point, the bottleneck, the gatekeeper. Before these restrictions, China exported more than 4,000 tons per year to the rest of the world. Now that supply is being shut off. China is keeping silver for itself. They see what is coming, so think about this. From the West, JPMorgan controls the largest private silver stockpile in history and has just shifted to betting on higher prices. From the East, China is cutting off supply to the rest of the world. Silver is being squeezed from both sides at the same time. This has never happened before in modern financial history, and you can see the stress showing up in prices. COMEX says silver is $16. That is the paper price, the screen price, the price of a promise. But try to buy real physical silver. In Dubai, it is $165 to $170. In Japan, $140 to $150. In Shanghai, $130 to $5 to $140. That is a $40 to $70 gap between paper and physical. People are paying 60% more for real silver than the official price claims. Why? Because when you try to obtain physical metal, there is not enough. The paper price is fiction. The physical price is reality. and reality is screaming that silver is worth far more than what the screen says. Now some of you might be thinking, wait, did the Hunt brothers not try this? Did they not attempt to corner silver and fail? That is a fair question. Let me explain why JPMorgan will not fail the way the Hunts did. In 1979, Nelson and William Hunt tried to corner the silver market. They accumulated around 200 million ounces. Prices surged from $6 to nearly 50%. Then the government stepped in. COMEX changed the rules. They allowed selling only, no buying. The Hunts faced margin calls they could not meet. They went bankrupt. Silver collapsed. The lesson everyone took away was that you cannot corner silver. The government will stop you. That is what everyone believes. But here is what almost no one understands. The Hunt brothers used leverage. They bought on margin. When the rules changed, they could not meet the calls. JPMorgan bought physical silver, real metal. No leverage, no debt, no margin. You cannot margin call someone who owns the metal outright. The Hunts held paper. JPMorgan holds metal. And now look at the difference in scale. The Hunt brothers at their peak held about 200 million ounces and nearly broke the system. JPMorgan today holds 750 million ounces, 3.75 times more. If 200 million ounces push silver from $6 to 50, roughly 8 times higher, what could 750 million ounces do? Imagine silver moving 8 times higher from here. That would put it above $800. Now, I am not saying silver will reach $800, but the math is the math, and JPMorgan ran this math long before they accumulated. They see something coming, something big. Let me show you what they likely see. Industrial demand. This is the part almost everyone completely overlooks. Silver is not just a shiny metal. It is one of the most critical industrial materials on Earth. Solar panels. Every single solar panel requires silver. Silver has the highest electrical conductivity of any element. There is no replacement. Global solar adoption is growing exponentially. By 2030, more than 12,000 tons of silver demand will come from solar alone. Electric vehicles. Every EV uses more silver than a traditional car. 50 million electric vehicles per year are expected by 2030. Fifth-generation networks. Every tower, every base station, every piece of infrastructure requires silver. And here is the biggest factor nobody is talking about. Artificial intelligence. AI requires data centers. Massive data centers. Millions of servers. Every server uses silver in its connections and circuitry. Microsoft is spending billions. Google is spending billions. Amazon is spending billions. All building AI infrastructure, all requiring silver. This demand did not exist 5 years ago. It barely existed 2 years ago. Now it is exploding. So you have solar demand rising, EV demand rising, 5 grams demand rising, AI demand rising, all at the same time. All dependent on silver, none with real substitutes. Now look at the supply side. 70 to 80% of silver production comes as a byproduct of mining other metals like copper, zinc, and lead. Only about 20% comes from primary silver mines. That means even if silver hits $500, miners cannot simply produce more silver. They must mine more copper first. That takes years. New mines take 7 to 10 years to bring online. Even if every company started today, new supply would not show up until the 2030s. Demand is accelerating. Supply cannot react. Deficits are growing. Inventories are shrinking. And JPMorgan is sitting on 750 million ounces, watching all of it unfold. Now let me bring this back to you. Think about the next 5 years of your life. Solar panels covering rooftops. Electric vehicles replacing gas cars. 5G connecting everything. Artificial intelligence transforming every industry. All of these trends are accelerating. Every one of them requires silver. None of them can function without it. Companies like Tesla, Apple, and every major solar manufacturer need silver just to operate. Without it, production stops. If supply tightens enough, they will pay any price necessary. And who controls the supply? JPMorgan. It is like owning the only gas station in a town full of cars. You decide the price. Now you might be thinking, okay, I understand the story, but is it too late for me? Let me be honest. Silver was $18 5 years ago. It is now over $100. That is a massive move. But here is what matters. Previous precious metals bull markets lasted 7 to 10 years. If this cycle began in 2020 when silver was around $12, we may still be in the middle innings, maybe not even that far along. The fundamentals have never been stronger than they are today. Supply deficits for 5 consecutive years. China restricting exports, industrial demand surging. JPMorgan positioned for prices to multiply. Will there be pullbacks? Yes. Markets never move straight up. Sharp drops will happen, but the long-term direction, the bigger picture, all point the same way. Now let me tell you about something that happened that almost nobody noticed. In November 2025, the Trump administration added silver to the U.S. critical minerals list. This is enormous. The government officially recognized silver as strategically important, in the same category as rare earth elements. That is essentially saying silver is a matter of national security. Why would the government suddenly care about silver? Because they see everything. You have just seen the supply risks, the China restrictions, the exploding industrial demand. And here is the part that raises questions. JPMorgan flipped their position to long silver right before this announcement. They closed their shorts between June and October. The critical minerals announcement came in November. Coincidence? Maybe. Or maybe when you are the largest bank in America with connections at the highest levels, you hear about these developments before anyone else. You position first, then the announcement comes. Then prices react. By the time the public finds out, smart money has already moved. But here's the good news. You are hearing about this now, not 5 years from now. Not when silver is already sitting at $300. Now, what you choose to do with this information is entirely up to you. Let me give you a few things to watch going forward. COMEX inventory. If it continues to fall, the squeeze is getting worse. Physical premiums. If Dubai and Shanghai keep paying 60% more than COMEX, something is seriously wrong with paper pricing. Lease rates. When it becomes more expensive to borrow silver, supply is tightening. Any news about industrial companies struggling to source silver confirms everything. And JPMorgan's activity. If they begin delivering more silver into the market, that signals they are starting to sell. That is when the real fireworks begin. Now let me be clear about something important. I am not a financial advisor. I cannot tell you to buy this or sell that. You have to do your own research and make your own decisions. What I can do is show you what the biggest players are doing. And right now, the biggest player just made the biggest move in precious metals history. 750 million ounces, 15 years of accumulation, then a full flip to long at what looks like the perfect moment. They are not guessing. They have more information than anyone, more resources than anyone, more connections than anyone, and they are betting heavily on silver going much higher. You can look at that and say, interesting, then do nothing. Or you can look at it and say, if the smartest money in the room is making this move, maybe I should pay attention. The choice is yours. Let me leave you with this. 10 years from now, you will look back at this moment. You will either say, I saw what was happening and I acted. Or you will say, I saw what was happening and I did nothing. Both are choices. Both come with consequences. JPMorgan made their choice. 750 million ounces worth of choice. China made their choice. Export restrictions and hoarding. The question is, what will your choice be? If this video opened your eyes, I need you to do something. Do not just like this video, share it. Send it to one person you care about who needs to understand what is really happening. Most people will never see this information. The mainstream media will not cover it. But you saw it. Now help someone else see it too. Subscribe to The Hidden Economy. I am going to keep breaking down what the big players are doing so you are never caught off guard. And drop a comment below. Say wake up. If this changed how you view silver, I read every comment. The silver market is at a turning point. The biggest moves often happen when most people are not paying attention. Now you are paying attention. But before you go, I need to show you a few more things that complete the picture. Remember earlier when I talked about the 24-to-1 ratio, paper claims versus physical silver? Let me explain why that ratio is even more dangerous than it sounds. When traders buy silver futures on COMEX, they are buying a contract, a promise that silver will be delivered at a future date. Most traders never actually want the metal. They trade the paper, take profits or losses, and move on. The system depends on that behavior. If everyone demanded physical delivery, the system would collapse overnight. But something is changing. Traders are starting to demand delivery. Not a few, a lot. Normally, traders roll their contracts forward. They push delivery further out because they only want price exposure. They do not want to deal with real metal. But now, traders are rolling contracts backward. They are moving from March contracts into January contracts. They want metal sooner, not later. Why the urgency? Because they are worried. If they wait too long, there may not be any silver left to deliver. This is the kind of behavior you see right before a system breaks. Confidence erodes. People want out of paper and into physical. And here is the key detail. On January 7th, JPMorgan delivered 99% of the silver. Everyone else combined delivered 1%. 1%. That tells you almost no one else has metal to deliver. The system is running on fumes, and JPMorgan is the only gas station left. Let me give you another eye-opening moment. Those physical premiums I mentioned earlier, Dubai at 170, Japan at 150, Shanghai at 140. There is a reason arbitrage is not closing that gap. In a normal market, traders would buy silver on COMEX at $16, take delivery, ship it to Dubai, sell it for 170, and pocket the difference. Easy money. Except that trade does not work. When you try to take delivery from COMEX, there is not enough silver. The arbitrage is broken because the core assumption is wrong. COMEX assumes unlimited silver is available for delivery. That assumption is no longer true. The paper price and the physical price are diverging because they represent two different realities. Paper represents contracts. Physical represents actual metal. And actual metal is becoming scarce. Now let me talk about lease rates, because this is where you really see desperation. When someone needs to borrow physical silver, they pay a lease rate. Think of it like renting silver. In normal times, 1% to 2%. Plenty of silver available. No stress. October 2025, lease rates exploded to 35%. 35% annualized just to borrow silver for a short period of time. That is desperation. That is people willing to pay almost anything because they cannot find physical metal. Even now, lease rates remain around 7% to 8%, still far above normal. The stress has not disappeared. These are not numbers I am inventing. These are published rates. Anyone can look them up. The market is screaming that physical silver is scarce. Most people simply do not know how to listen. Now let me connect a few dots that may completely change how you see this. Remember when I told you China restricted silver exports on January 1st? Here is what most people do not realize. China does not just refine silver. China consumes enormous amounts of it domestically. Solar panels. China produces more solar panels than the rest of the world combined, and every single one requires silver. Electric vehicles. China builds more EVs than any other country, all of them using silver. Electronics. China is the factory of the world, and virtually everything they manufacture needs silver, so China is not restricting exports just to hurt the West. They need that silver themselves. Their internal demand is so massive that they cannot afford to let silver leave the country. This is not a temporary policy. This is a strategic decision to lock down their own supply. And that means the rest of the world has to source silver somewhere else. But where? Mexico is the largest silver producer, around 200 million ounces per year. But Mexico has its own domestic demand, its own political realities, its own priorities. Peru is second, roughly 120 million ounces, facing similar constraints. You cannot simply reroute global supply chains overnight. It takes years. In the meantime, the West is scrambling for silver while JPMorgan sits on 750 million ounces. This is how the pieces fit together. Let me give you one more insight that almost nobody is talking about. The US Mint. In late 2025, the United States Mint announced it was pausing silver coin sales, not slowing production. Pausing entirely. The reason? They could not secure enough silver blanks to meet demand. Think about that. The United States Mint, a federal institution that literally produces American currency, could not obtain enough silver. Let that sink in. The government is struggling to source silver while JPMorgan is sitting on 750 million ounces. The government is constrained. JPMorgan is stacked. Who do you think holds the leverage in that situation? Now I want to address a question that might be bothering you. Is this legal? How is JPMorgan allowed to do this? The short answer is yes, it is legal. And that is exactly what makes this so important. They paid $920 million for manipulation. That fine was tied to specific trading practices, spoofing, placing fake orders. But accumulating physical silver? That is simply buying an asset. Perfectly legal. Owning more silver than any private entity in history? Also legal. Flipping from short to long at the perfect moment? Still legal. They played within the rules. They just played the game better than anyone else. You can feel frustrated by that, and that reaction is understandable. But frustration does not change reality. The reality is, JPMorgan now influences the silver market in a way no private entity ever has. What matters is what you do with that information. Let me talk about the gold to silver ratio, because this gives crucial perspective on where silver could go. Right now, gold is around $5,100. Silver is around $106. That puts the ratio at roughly 46 to 1. In other words, it takes 46 ounces of silver to buy 1 ounce of gold. Historically, during precious metals bull markets, this ratio is compressed to around 15 to 1. In weak markets, it has expanded beyond 100 to 1. In 1980, at the last major silver peak, the ratio reached 15 to 1. If the ratio returns to 15 to 1 with gold at today's price, silver would be around $327. If gold rises to 6,000 and the ratio moves to 20 to 1, silver would be $300. If gold reaches 10,000 in a currency crisis and the ratio compresses to 15 to 1, silver would be roughly $667. These are not forecasts. This is simple math based on historical relationships. The point is that silver has upside potential. Most people have never actually calculated. JPMorgan has. That is why they hold 750 million ounces. Now let me give you a framework for thinking about all of this. There are 3 types of people watching this video. The first type will say interesting and do nothing. They will watch silver rise from the sidelines. 5 years from now, they will say they knew about it but never acted. The second type will overreact. They will go all in, use leverage, ignore risk. When volatility hits or prices pull back, they will panic and sell at the worst possible time. The third type will take this information seriously. They will do their own research. They will build a position they can hold through volatility. They will think long term. They will understand this is a multi-year cycle, not a get-rich-quick trade. I am not telling you which type to be. That decision is yours. But I will tell you which type JPMorgan is. They did not panic buy. They accumulated slowly over 15 years. They built a position they can hold regardless of short-term price swings. They planned in decades, not days. That is how this game is played at the highest level. Now, let me talk about what could go wrong, because no thesis is perfect. Government intervention is a real possibility. If prices rise too quickly, if industrial production starts getting disrupted, governments could step in. They could change the rules the way they did with the Hunt brothers. They could restrict trading or impose price controls. JPMorgan's physical position makes them far less vulnerable than the Hunts ever were, but the risk is not zero. Demand destruction could also happen. If silver becomes too expensive, companies will pour billions into researching alternatives. Silver's properties are unique and there is no perfect substitute, but at extreme prices, everything gets questioned. A recession could also hurt industrial demand. Manufacturing slows during recessions, which reduces silver usage. At the same time, recessions tend to increase investment demand for safe havens, so it can cut both ways. New supply could eventually come online. High prices encourage exploration, and new deposits may be discovered, but the timeline is still 7 to 10 years at a minimum. Until then, deficits continue. These risks are real, and they should shape position sizing and expectations. But here is my perspective. When the most sophisticated bank in the world spends 15 years and billions of dollars building a position, they have already considered every one of these risks, and they still made the move. That tells me their confidence level is extremely high. Let me give you specific things to watch going forward. COMEX registered inventory. If it drops below 30 million ounces, that is critical. Below 20 million would be emergency territory. Physical premiums in Dubai and Shanghai. If those premiums expand beyond current levels, the disconnect is worsening. Lease rates. Any spike above 10% signals acute stress. Industrial headlines. Companies announcing supply shortages or locking in long-term contracts at elevated prices. Government policy. Export restrictions, stockpiling programs, tariff changes. And JPMorgan's activity. When they begin selling instead of delivering, they are taking profits. That is when things really get interesting. Watch these indicators closely. They will show you whether this thesis is playing out in real time. Now let me tie everything together with one idea I want you to remember. Wealth transfers happen in every generation. Real estate in the 2000s. Tech stocks in the 2010s. Crypto at different moments. These are periods when wealth shifts from people who do not recognize what is happening to people who do. Right now, in the silver market, one of the largest wealth transfers in commodity history is setting up. On one side, you have JPMorgan with 750 million ounces, China restricting supply, industrial demand exploding, and paper markets under strain. On the other side, you have most people completely unaware, holding cash that loses purchasing power, trusting a system that is clearly showing cracks. The transfer happens whether you participate or not. The only question is which side you are on. 10 years from now, you are going to look back at this moment. You will either say, I saw what was happening and I acted, or you will say, I saw what was happening and I did nothing. Both are choices. Both carry consequences. JPMorgan made their choice. 750 million ounces worth of choice. China made their choice. Export restrictions and hoarding. The question is, what will your choice be? If this video opened your eyes, I need you to do something. Do not just like this video. Share it. Send it to one person you care about who needs to understand what is happening. Most people will never see this information. The mainstream media will not cover it. But you saw it. Now help someone else see it too. Subscribe to The Hidden Economy. I am going to keep breaking down what the big players are doing so you are never caught off guard. Make sure to join the channel. We are going to bring some exciting members-only videos for insider members. And drop a comment below. Tell me wake up if this changed how you see silver. I read every comment. The rest is up to you. I will see you in the next one. Stay sharp.